Thanks so much for joining me today.
Thank you.
Great. So we're here at PDAC. It's the beginning of a year. It seems like every year market watchers say we're going to say uranium make a comeback. This year, I've started to hear some people say 2018 actually did bring a turnaround. But where do you think the market is at?
Well, currently the uranium spot price is currently about $28, and it's been in a pretty narrow trading range since late last year. It's been sort of between the $28, $29 level. It was at its low in late 2016. It was at $18 per pound, and it moved up progressively last year, especially after McArthur River was taken offline. It continued to increase after that. There were a number of hedge funds, investor funds that came in and actually bought physical positions, so that helped push the market up. And at the same time, as Cameco's McArthur River mine was down, they had to come out and buy for sales for 2018 and moving into 2019. So it's pushed up quite a bit since then. We're sitting at 28, and this year, I think we'll continue to trend a little bit higher as Cameco has to buy for 2019 and potentially into 2020. It's really going to depend because it's becoming a little bit of a complicated market with Section 232 initiated by two U.S. producers in the interest of national security. So a lot of U.S. utilities have been somewhat tentative on the buy side right now. So the DOC is expected to make an announcement in April on that. And I think once that's announced, we'll have a little bit more clarity in terms of where potentially price may be headed and whether there's a tariff or a quota situation on U.S. uranium.
Sure. So you mentioned it is a difficult market to understand, I think particularly the supply and demand dynamics. Can you talk about what supply looks like currently? You said in your presentation yesterday we still need to see some more production cuts.
Yeah, right now, annual demand for 2019 is going to be about 190 million pounds. But last year for 2018, overall production was about 138 million pounds. But then we had secondary supplies, which range, these are stockpiles, inventories, which range from 45 to 50 million pounds. So, it's been fairly balanced. The question is, moving into this year, we will see a slight increase in production from the Kazakhs, and then we'll also see a little bit maybe in Namibia from China's new Husab mine coming online. But in general, we'll see a little bit more inventory utilization, so several million pounds that'll continue to be drawn down. But it's a slow market in terms of an actual turnaround.
Right, and how do stockpiles play into the supply narrative? Who holds them? How do we know what levels they're at?
Yeah, well, from years ago when there was a bit of a supply issue going forward, a number of floods in some of the Canadian mines that Cameco owned, and nobody was really sure how quick Kazakh production would escalate over time. A lot of U.S. utilities bought into a rising market, and they bought for a fairly long time frame. And so they accumulated significant inventory. So U.S. utilities are sitting on probably about over 2.5 to 3 years worth of inventory that they have on hand. They probably want to draw that down to about 2 years.
Okay.
Same thing with European utilities. They're sitting on about 3 years. And then China has a significant stockpile, but they're keeping that for strategic growth going forward as they build more and more reactors. But they're sitting on close to 400 to 450 million pounds of uranium that they will need in the future. But other stockpiles that are immediately impacting this market, we have some U.S. government stocks, we have some Russian government stocks, we have enricher underfeeding from the centrifuges that were enriching the uranium because that got cut back after Fukushima. There was quite a bit of excess enrichment supply, which they're now utilizing to underfeed these plants with less uranium, and then the enrichers can actually go out and sell that uranium into the market. So that's also having an impact. But utility inventory drawdown is a pretty big one right now, and of course the enrichers underfeeding the market. That amounts to about 20 to 25 million pounds right there of just inventory supplies coming into the market from that.
Okay. What about demand? The demand side for uranium. What levels will we see moving forward, and where is it coming from for the most part?
Yeah, we're expecting to see demand over the next few to several years being relatively flat, although we're seeing tremendous growth in China. Right now they have about 46 reactors online for about 46 gigawatts. That will increase to, by 2030, probably double to about 90 gigawatts. So there's tremendous growth there. In India as well, there's a significant amount of growth. We have new reactors in the UAE coming online, a couple new reactors in Georgia. But at the same time, we do have some headwinds with the German program phasing out in 2021, Belgium probably phasing out in the 2025 to 2028 period. Somewhat of a reversal in South Korea. We'll kind of see what happens with the Moon Jae-in, going forward as to whether there's a little bit of pushback from the establishment there that would like to see nuclear continue on. But the U.S. market's also facing quite a bit of headwinds in terms of natural gas competition, renewables, solar, wind power. And so there's a lot of energy legislation in New Jersey, Ohio, Pennsylvania that's trying to keep these reactors competitive going forward. So there's the potential for some more potential closings there, but we'll just have to see how things plan, how they emerge going forward. So, but in general, it's going to be pretty flat for the next several years, and then we'll see a pickup mainly due to the growth in the Far Eastern market.
So this year, what catalysts should people be watching? You mentioned Section 232, which a lot of people are talking about. What can you say about that or any others?
Yeah, 232 is a big one, to see whether that's going to be a quota situation, a tariff situation. It could end up in a bifurcated market if there's a quota situation where you could have a much higher U.S. price than you would a non-U.S. price, so it could become a bifurcated market. If there's tariffs, obviously, it could be placed on Kazakh uranium, it could be on Canadian uranium, so that's something to watch. Come, probably around April 14th, the announcement should be made, and then it'll go to the president, and he'll probably make a decision within 3 months of that time frame. So we should have a better idea in terms of how that's going to play out with U.S. utilities. Other things to look at would be if we see any additional production cuts this year. Going into May, there is a labor agreement at Cigar Lake, which is the only operating Canadian mine right now, uranium mine in Canada. And so if there's a potential there that production could potentially be cut for a short amount of time there. So that's certainly worth watching. And then, of course, the Kazakhs are a big wild card going forward, maybe not just this year, but out beyond 2020. They have firm established plans for 2019 and 2020. But 2021, they've talked about increasing production by quite a bit, up to 74 million pounds. But, given that they produce 40% of the world's uranium, if the price hasn't really recovered that much, it would surprise me if they would, escalate their production to that high of a level.
Do you have a specific price prediction for this year?
Yeah, right now we're at 28. We think it could push up to about 33. We could get another $5 out of the market. Unless, of course, we have a wild card situation where another mine potentially is shut down. That could push things up a little bit. The other thing would be, we haven't really seen many financial investor or hedge funds enter this market this year like we did last year. Last year, there was about 14 million pounds that was purchased by uranium funds and investor hedge funds. So if they come back into the market this year, that could potentially push price a little bit higher. But I think that up to 33 is probably a good target. It could potentially run up a little bit higher. It sometimes does. So.
And longer term, what is it looking like?
Longer term, I think we'll probably see it. We'll see it in that probably $35 to $40 range, because I think as demand increases, we will see a little bit of an increase out of Kazakh. There's a lot of overcapacity, excess capacity that's not being utilized. It's pretty low cost right now. Obviously, McArthur River, at least 18 million pounds there, another 17 to 18 million pounds unutilized from Kazakhstan. So there you have about 35 million pounds of production that could fill the void going forward. But certainly beyond 2026, 2027, there's a gap that does emerge there, and Cigar Lake will run out of reserves by then. We'll have some reserve depletion from Kazakhstan. So it's possible that starting, as early as 25, we could see much more of a push on uranium prices, where it could escalate above $40 per pound. So it's really maybe a little bit more of a long-term play than a short-term play right now.
Right. Yeah, just as we finish up, I was going to ask all of this optimism about uranium that we see from a lot of investors. Should they feel that right now, or is it really...
I would say it's cautious optimism.
Sure.
I think, a couple of years ago when the price had bottomed out at 18, there was certainly, some room for it to run. I think it still can push up, but it's going to be much slower growth than what we saw previously.
Okay, well, thank you so much. That was great. I think we'll leave it here for now. Great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Nick Carter.